Hey, Steve, Jamie, how's Monday going?
Hey, Scott, thank you very much. Happy Monday to everyone out there. Steve, how was your Monday, sir?
It's starting off just like a Monday, but so far so good.
Yeah, it was definitely kind of Monday-ish in the markets, and we'll get into that shortly. But hey, March 29th, last office hours of March. Spring is upon us. The market is fickle and changing, but there's always something out there to trade. So without further ado, welcome everybody. Let's just get through the legal mumbo jumbo real quick here before we begin. Just want to make sure that everybody in attendance is aware of the fact that all the info that we share with you guys during this webinar or any of the other webinars that we have coming at you on a weekly basis is for educational purposes only. Meaning, if you need someone to give you investment advice, what to buy, when to sell it, all that good stuff, please do yourself a favor and find a registered investment advisor or someone like a Series 7 licensed stockbroker that is legally dispensed, or excuse me, that is legally licensed to dispense that type of
Interesting
information
way to put it.
to you. Yeah, I'm a little tongue-tied today, Steve. My eyes are bulging out after today's market, staring at the screens all day. In any case, though, um, educational purposes only. If you need some investment advice, please seek out the appropriate type of individual for that type of stuff. All right, always like to take a little bit of time at the top of the hour here to, especially for the new people that might not know about the community that we've fostered around the TI Tech. It's right here. All kind of starts off up here with the trading room hosted by Mr. Barry Anderson. Barry opens the doors about 30 minutes before every open, and there's always a good crowd in there. And you have people from all skill levels, beginner, intermediate, advanced, as well as Barry, who does a fantastic job of moderating such a large crowd, answering questions and showcasing the way that he uses the technology. Of course, it is free for the TI community. You don't necessarily even have to have a subscription yet to get in there and see what it's all about. So take advantage of the trading room. Of course, today is Monday. You get myself and Steve. Steve's going to grab the steering wheel for the trade of the week on Tuesdays tomorrow. Hump Day rolls around. Like to change it up just a little bit, bring in the Q&A demo with our CEO and founder, Mr. Dan Merkin, along with our Chief Technical Officer, Brad Williams. And he's going to round out the 5 p.m. Eastern slots on Thursday with the Trading Studio, and I'm going to ride shotgun with him. And of course, we have our ever popular daily support session, which happens Monday through Friday, starting at 12 p.m. We allocate an hour for that one, 12 p.m. to 1 p.m. Eastern, and it's a great place to come get any type of TI question answered in a live environment with one of us trader/trainer guys manning the helm there. So it's a different person every day. Next slide here will show you how to get there. Just take note of the address at the bottom left there, trade-ideas.com/live. That is a static address. So once you get there, you just bookmark it, and it's easy to get to each and every time. So once again, 12 p.m. to 1 p.m., or excuse me, 12 p.m. to 1 p.m. Eastern, or as you can see here, the Eastern times. Moving right along. In addition to the support session, that's Monday through Friday, we've got a slew of educational videos that are really good, especially when you're brand new. Help you get over the learning curve a little bit quicker than not watching these videos. The TI University series is a great place to start, especially 101 and 201, getting you through all the basic mechanics, windows, what they do, how to get them programmed, how to use filters, things of that nature. And of course, 301, 401 being the more advanced topics where we get into back testing and things of that nature. But this is a 4-part series. It's available on our YouTube channel. So if you haven't explored our YouTube channel yet, you just cruise on over to YouTube, type in Trade Ideas, find our channel, and then you can start searching and watching all of the videos there. Okay, pointer, where'd you go? There you are. All right, so here we are, today's agenda. I'm gonna let Steve do the market recap as normal. We'll talk about how the CC, the compare count readings played out today. Pretty textbook. Then we'll go into the Holly recap today. Holly Holly had a pretty good day considering market conditions, and we'll go over those trades, talk about some of the trade arounds, conservative, moderate spread. We're going to revisit the window that I distributed last week, big up, big down previous days. And then we're going to talk about some of the old school stuff, getting back to basics with the opening range breaks. And that should get us through the hour. So without further ado, Steve, if you're ready.
Yep, I'm over here.
I'm going to pass the baton over to you.
Oh, yeah, I guess I better show my screen first.
That might be slightly helpful.
All right. We're going to start today for the market recap, see what's going on out there. We're going to go from best to worst, okay? Something we've noticed over the last few weeks, of course, is the word rotation, and they're rotating out of tech and a lot of speculative stuff into value and growth and a little bit more simple stuff, your grandpa's kind of stuff. And it's very much indicated here in the Dow ETF. I mean, I think we all can kind of agree, you know, we see something like this happening over there. Not a bad looking 4 month snapshot for the Dow. Back it on down to the SPYs, a little different story, but still kind of, you know, giving us that textbook, perhaps cup and handle action, nothing to be sneezed at, nothing to be short. You know, I know last week we were probably back in this area, and I said we needed to work some stuff off for me to start looking for longs again. And for a brief period, we tried to break the 50-day moving average, and once again, kind of a stick save, to use a hockey analogy, kick the price back into play. But I'll tell you, it seems like, and I've been corroborating this with some of the guys here and swing traders, that you can look at the market up 1.5%, 2% on a given day, and your 3 or 4 stocks in your swing trades are down. There's just a weird bifurcation under the surface. It seems hard to get good swing trades to follow through, and it's not always indicative of what you see in the general market. So I'm taking things really slow. I'm only long a couple of things, including the trade of the week, Box, which is looking really good, by the way. I really like the way this thing is giving us a nice tight little range there, just begging to continue that initial direction. But we're on the SPYs, and again, okay, looking, we're knocking on the neighborhood. We're right around the corner, going to knocking on the door of all-time highs again, right around 398.12. All right, the Nasdaq. Let's look at the Qs. They led us higher for the entire COVID economy relief, whatever you want to call that, last year that we just survived. But they passed the torch pretty much back here when everything broke, and they have not recovered. That's just a mess. That's why I squiggled those lines. It's just a mess. And here's what I see when I look at this initially. I see this 50 period moving average, which is a very key indicator in my book. It's essentially health. Is the stock healthy above the 50-day moving average, or is the stock not so healthy under the 50-day moving average? Do crossed out eyes like that. And Nasdaq cannot get back above its health line, its 50-day moving average. It's tried a couple times, was pretty good tweezer if you want to get involved in the candlestick patterns. Rejection there above the 50, didn't quite let it get above for very long, and then another similar double rejection right at that line last week. So the Nasdaq's essentially, in my book, kind of guilty until proven innocent. If it can get back above this 50-day moving average, then boy, in this market is just an unbelievable beast and cannot be stopped. But that's interesting. Okay, so we've got, as I said, a lot of swing trades are just not following through. It's not really indicative of what we're seeing out there in the SPYs, so being very, very selective on my longs. I'm not short anything. Lastly, this is interesting. Let's talk about the small cap tech, small cap world. And of course, as I just said, my first inclination is to see how is this thing playing out. And it seems to be textbook, again, a textbook situation of rejection under that 50-day moving average there on Friday, and a little wick action there. We've got some crossovers here. That's a very ominous position to be in. I call it the armpit sometimes. You get a nice relief bounce from being oversold, and then all of a sudden you return to the scene of the crime, which you broke down from, being the 50, and you can't get back above it for 2 days in a row. You've got these moving averages now above. There's a lot of headwinds here. So a very different world from the value stocks, the industrials, the dividend paying, slow moving, boring ones, I mean to say boring, all the way down to small cap. To me, it looks like, yeah, that's pretty scary. I would not want to be heavily weighted in the OTCs and the small caps right now until this possibly resolves itself. So a lot of conflicting signals, not enough for me to just, you know, pile on and get bearish. I was a bit concerned last week, but once again, the market has just popped right back into play. And if it can just sideways action here a little bit and settle in and you know, calm the nerves of the bulls that maybe it is time for another leg higher, I'll participate. But it looks to be like if we're going to talk about something in the future, this seems to be the line that is defended by the dip crowd. And if this thing gives way again, you're going to have to just wait and see how it resolves itself before you pick a side. There's a great book called The Art of War, and somebody was smart enough to take The Art of War and literally apply all the chapters to trading. The Art of War as it applies to trading. And one of the axioms is, you know, when you come across two factions that are fighting, it's best to just sit back and wait and see which faction wins before you join them. Otherwise, you got a 50-50 chance of being on the wrong side. So that's what I mean when I say, see how the market resolves itself at the 50-day moving average the next time it tests it. If it can't post a close or two, if it posts a close or two below the 50 and can't get back above, kind of like what the Nasdaq's been doing recently, yep, double rejection, almost a triple rejection there. That's a bit concerning because it was such a good leadership sector on the way up. And then, of course, our OTCs and our small caps also being rejected. So we'll see who plays out. That's really all I got, Jamie.
Good stuff, Steve, as always. Let me grab it back from you here. Okay, I should have it. Okay. As always, I like to talk about my compare count window to help set expectations for the session. Taking a peek at this little guy 15 minutes after each open. So it's this window right here, just in case anybody hasn't seen this before. It's pretty simple. We're looking at stocks hitting a new high. A few filters in here, market cap above 4 billion, accelerated 1 minute volume. But we're just looking at those stocks hitting highs versus stocks with the same filter characteristics hitting lows, and then looking at that after the first 15 minutes or so. So this morning, after the first, cancel that. After the first 15 minutes this morning, we had a pretty bullish count, 57% versus 43, and typically don't really get too excited unless we see a bias of 55% one way or the other. So when I saw this after the first 15 minutes, I'm thinking to myself, okay, let's trust in the metric here and see what happens. And let's just pull up the SPY real quick here and kind of map it out. And usually there's two scenarios that will unfold here. All right, here we are looking at the SPY on the 15-minute intraday. First candle of the day being this one right here, okay? So a lot of the times we'll see an immediate lift if those compare counts are strong to the upside. Other times we'll see a little down leg, but a return to highs later in the session. And that second scenario is what we had play out today. But as Steve was, describing earlier, when you see these metrics play out like this and you're like, yes, we're heading back up, and then you look at your blotter and several of your longs just aren't doing anything, it's a little frustrating. And that is the market that we're in right now. For the past 1 year, since all the COVID crazy, kicked into play, it's just been swing trading has been the obvious choice based on other people, trading communities, all of us trader guys here at Trade Ideas, and more importantly, results of those trades. But Steve likes to use the musical chairs analogy a lot, and I think we're getting to that part where the music stops and there's not enough chairs for everybody, and some of these things that you thought should continue just aren't continuing. So a lot of adjusting of expectations, and when we get into some of these holly trades, it's going to be even more obvious that the market is getting into quote unquote difficult territory. Sure, we're not too far from all-time highs, but that doesn't make things easier. All right. We've talked about rotation, If we just take a quick glance at my all-time high ticker here, what are we seeing here? We're seeing the same sectors: retail trade, manufacturing, finance. And if I, I'm not showing the history on this thing right now, but if I did, you'd see the same old sectors, okay? But it's kind of hit and miss. One will continue, one will not. So having said that, let's talk about Holly's performance today. And we're going to see more of what I just described in the Holly performance today, which was a great performance. We had 7 signals. So always like to talk about 3 different things, assuming that they are present. And that is conservative versus moderate spread, how we might be able to pluck some of that out. Any good add-on opportunities once a trade was initiated already by the AI. Does it present an opportunity to add to that trade, or a trade around? And a trade around is typically based around a stop loss. So we did have a good example of a trade around today, but it's a little bit different. And the next chart that I'm going to pull up, let's just go ahead and look at this trade today, CLDX. Okay. So look at this chart. I mean, talk about a rounded bottom on the intraday. It doesn't get any more rounded bottom than that. I mean, we were laughing about this amongst all of us trader guys that trade ideas today, the cereal bowl pattern. At one point in time, there were lamentations about people covering. They're like, yep, I just covered. It's probably gonna, keep on going now. And sure enough, if we check out the shaded area up here with Holly, the trade was closed out pretty early, but that was only because the profit target got hit. And we can see the target over here is 1760. It's always nice, but boy, I mean, there was a lot of money left on the table there. So when we see that 1755-ish target get hit, and then CLDX cruise all the way back down to, 1549, basically another 2 points. All right, so check this out. All the way back here to this little area of support, or that apparently is acting as support now, back from October of 2020. To see this thing not only stop going down, but then go all the way back up and set intraday highs and eat into that gap a little bit, pretty crazy type action, okay? And that just goes to show you, this chart right here is a perfect testament as to the type of market that we're in. Now, while we're talking about CLDX here, sure, we could have ignored this and hoped to have gotten a little bit more, but check it out. If we were stubborn, by the time the day is out, we would have been losing money on that trade. So we've got 2 stop hits right here, or excuse me, 2 profit targets hit, one in CLDX, one in HGen. Of course, this one was a long trade, but it's the same song and dance. If you got too greedy on this one, everything disappeared, and that's a short. If you got too greedy on this one, everything disappeared, but it's a long. As soon as those profit targets were hit, we got a little bit more run out of each one. But if you weren't nimble and you didn't manage your trade properly, all that went away, okay? So, typically we don't see this type of action, but even Holly's trades, which are statistically weighted, we're seeing the same things. NMR, and I can't remember the symbol, I think it was last week, we had one of these as well, which ended up being a pretty good performer, which was a big gap down, and then we had this sideways action all day. Now on this one, it's the opposite side of the coin, all right? Holly pulls the plug on a profit save, staying in it till, she just couldn't stomach it anymore, getting out about right here, right at the entry line for a flat. Had we held this one though, would have been rewarded, okay? Just a slow grind down for the remainder of the day. Now this one set up initially like it might present some additional opportunity in the form of an opening range break. It just never got there. Selling, can't say selling wasn't heavy, we just never did come down there and break lows. So I put myself on a trader's diet today. I was like, okay, I'm gonna pick out one Holly trade, I'm gonna interact with that one. And notice the name of this company, Nomura, okay? Forgot what time it was last night. Japanese markets, everybody was talking about, hey, Nomura's involved in some shady stuff with a U.S. client. More, I can't remember exactly what it is, but more shenanigans, okay? Thus, the large gap down here. And let's see, where did we close yesterday? Or excuse me, Friday. We closed, well, my numbers disappeared for some reason. We closed, well, and now I'm blanking it out with my pen, so let me get rid of that. We closed at 661, and we opened the day 572. So looks like a big gap. I think we were down 14. That's basically where the gap was, about 14%. But this could be the first of many other of these types of quote unquote situations that develop from holding companies, trade anomalies and things of that nature. So I was all prepared. I'm like, I've seen this song and dance before, especially when you get about an hour, hour and a half, and you see a Holly trade and it's slightly in the money and it's doing this sideways dance. I was all prepared. As soon as this thing broke lows, I was going to add to the position. It just never did happen. Still ended up being a decent winner. Just not what I thought it might turn out to be if it broke one way or the other, hopefully to the downside. But I would definitely keep an eye on NMR for the following sessions because it might have a little bit more, well, it could have some upside or it could have some downside depending on what news actually surfaces and how bad things might get for that company. But interesting nonetheless, when I saw that pop up on Holly's blotter today, after reading about it last night, I'm like, yeah, I'm going to take a stab on that one. So ended up being a decent winner, just didn't break, but will be one to keep an eye on moving forward. Now, let's talk about GSX. And by the way, we can see right here where Holly got out on that little uptick. And I almost pulled the trigger too, but I'm like, nope, I'm giving it to a new high, a few pennies outside of a new high, and that was able to keep me in the trade there. Now, let's take a look at GSX. Not a bad trade here whatsoever. Short signal coming pretty early in the day, first 15 minutes or so to be exact here, first 5 minutes, 6 minutes of the market, and just sideways action pretty much all day, butting up against that entry line many, many times. Holly finally just throwing in the towel right here. And then look what happened, okay? So as far as early exits or profit save or reduce risk go for Holly, unless we're really barking at this stop loss level up here, getting pretty close, I'm pretty much going to ignore them all the time and let the trade play out. Just a friendly reminder here, that is why we have stops. In case we're wrong, that is our exit point. So this one getting back up to the entry level, but all we had to do is stick with our guns, and we did get a nice little decline here going into the close. So big difference between making nothing and risking $100, which is what all these figures are based on, and getting a little one-for-one return on that bet. Now we did have a little bit of spread here between, or in MOGO and HSIC. It's just so minuscule. I mean, $0 versus almost 40. We can see right here the same old song and dance. Back up to the entry line, but nothing to sweat it because the stop loss is way up here. Never even got close to it. So once again, just being a little bit more patient, letting the trade play out, would have gleaned us a little bit of cash both in MOGO and HSIC, which is a long as opposed to a short. So one more short than long today, so pretty mixed bag with Holly. And then the biggest winners, or two of the bigger winners coming from the profit targets being hit. But if you would have tried to stay in those, would have been curtains, right? You would have been giving back everything and taken a loss. So bifurcated is the term of the day, as Steve was pointing out earlier. Some are continuing, some are not, and it's really just kind of hit and miss right now, and no rhyme or reason to it, despite technical prowess or volume or anything like that. But a pretty solid day from Holly, considering market conditions on a low trade count. So we'll see what she does tomorrow. Thank you very much, Holly. Okay, so last Monday, I handed out a simple top list, and this is yet one more testament to how quickly things are changing in the market. Last week we had a bunch of runners that made huge runs that had inside days that presented some good opportunity when that inside day high was being hit for additional moves up, but all of a sudden they've disappeared. Now, the window that I handed out last week, the top list was this simple little top list right here, the big ups and downs. And the day that I handed it out, JFIN was fitting the pattern, and I'm just gonna point that out here, and then we'll look at the other ones that the window produced. But right now it's kind of dried up, but I'm still gonna keep an eye on this one because it's a real simple process. I'll show you how I go through it after the open, just to see if there's anything good out there, okay? So this was the 22nd, this was last Monday, okay? And then this top list was on my desktop for that Monday open. So what we're looking for with this one are the stocks that took these big up days. So obviously this candle here was the big up day. And then we look for a small candle on the inside day. And then on the day after that had been put in, obviously this was the 22nd, all you do is you wait for the high of that small inside bar to come to fruition there, and then take a stab at it. You got clearly defined risk parameters here, and once that small inside day gets topped out here, we can see what JFIN did on that day. It took a nice run. On the following day, we had Funko exhibiting the same type of pattern. So this is the day in question. This was an inside day right here. Not the biggest day, but an inside day nonetheless, and the downside perimeter had been met on this day. So we're seeing it on this day, and you can see here, once that inside day, and that's really kind of the key here, the bigger the bar here, the better. Right here, the bigger this bar is, in my opinion, the better. But as long as the red day is an inside day, it's a viable candidate. And then once again, we wait for that high to be penetrated from the prior day, and then we got a nice little run out of Funko there. Then on the 24th, it was W. Key's turn. Okay, so a decent up day over here on the 22nd. We did have an inside red day down significantly. And then as soon as that prior top had been penetrated there, we got a nice intraday run out of W. Key, and even a good swing trade candidate, it did eventually gravitate back up to those highs. But whether you're swinging it or, I think these are more geared towards the intraday plays, because when things are this crazy, anything can happen on the following day. But these are some pretty good moves and some pretty simple ways to play these stocks. And all you have to do once the market opens is just start looking. It's best just to sort by change, and then look at the ones that are down big. So obviously, yesterday we had a big down day in Viacom, but the pattern's not intact. We didn't have a big up day. We're not looking, today is an inside day, but not really the thing that we're looking for here. We're looking for things that had big runs, and now we're seeing an inside day. Technically, this could fit the mold, but we can see here, this was never violated, so we never got any upside. So it's just a real simple process. You're gonna cruise through these, and you're gonna look for ones that are playing out like this. Of course, there aren't any today, but who knows when the runs on the smaller stocks are gonna kick back into gear. And when that happens, you're probably gonna see them coming through other tickers. But the bottom line is this: simple process, scan through the ones that are down big prior day. If they fit the pattern, mark them up, set a price alert. There just aren't any that are present currently, but that might change in the future. With the market being as schizo as it is right now, you never can tell what's going to happen. So I'm going to continue to watch this window because you just never know what stock might break onto the scene next. So I just kind of wanted to review that, kind of refresh everyone's memory on what to look for here. Big green day, small inside bar, and then a penetration of the high on that inside day. Who knows, these might start presenting themselves to the downside as well if the market continues to be fickle. So we'll just have to wait and see on that one. All right, Steve, looks like you're knocking out the questions there. Let me know if you need me to backtrack and answer any questions. And I see your request there, George. So I tell you what, I'm going to go ahead and drop this into the window now, so I don't forget to do it later. That's the big ups and downs, prior day, top list. Okie dokie. So we got through Holly, we revisited the big downs and update. And now with the market being fickle, you know, when your level of uncertainty is at a certain score, right, which I think that kind of applies to all of us traders right now, you tend to pull the reins in and just kind of go back to bread and butter type trades. You know, the swing trade bonanza has been nice, but things are clearly changing now, and that's just normal for the market. We're in a state of, I guess, digestion. Everybody has to pull the reins in, adapt, and wait for things to solidify. So we're going to talk about some opening range breaks today, which are about the simplest patterns that you can hope to find. Now, the interesting thing today also, you know, which one of these things is not like the other? You know, yeah, the market finished close to highs, but as Steve and myself were discussing earlier, a lot of our longs didn't move in tandem with the market. If I were to go through my entire new T high window today, looking for stocks, you know, of course, and this one didn't start hitting highs until this area right here was broken, not a lot of good. But if I were to go through the entire history of this window, you wouldn't find one good quality opening range break. They just aren't there today. With the market going up, the funny part, keeping with the theme of things are kind of wacky right now in the markets, the only quality setups that were present today in the form of opening range breaks were to the downside, being produced, of course, by this window here. So let's just take a look at some of those that were choice setups. We're going to have to go back to the 5-minute on these because some of these were pretty early in the session. First on the list here, TCCR. So obviously this is Friday's activity. Here is the first candle for today on CCR. 1, 2, 3, 4, 5, 6, right at the 30-minute mark. What do we have here? We got a breaking of that range. So a nice little high and low consolidation area right here. And then boom, right here, we break it. How was the volume on this guy today? Okay, that's what I like to see. Finished the day trading 3.8 on the relative scale, kicking out a good 1.2 million, so you know it was liquid today. So basically, just taking a short right here at the 2310 level, and you had risk up to 2356. So not a bad risk area right here. What I say, 2310. So what do we risk? About 40 cents on that. And the way that I typically evaluate risk is not including the entry bar. We just look back 15 minutes. So those top 3 candles right there, obviously being the top, 2358, 2315 trigger there. So a whopping 40 cents risk would have kept you in this one with no sweat. And we went from 2312, pretty much got all the way down here to about 2121. So not a bad short trade. Not a bad setup there, nice and tight, low risk, and a high reward area. You know, if we put another line there, huge reward area, very small risk area, and that's what we want to see. Also had a decent one in TBBK. Not quite as pretty, but not high risk either. 1, 2, 3, 4. So this one coming a little bit later in the day, about 45 minutes, but that's all fine and good. We have to give the market time to show us something in the form of a pattern. So up here in our risk area, it's the entry bar right here, 5, 10, 15. So our risk area was up here. Oops. Entry point right here at 21.21. Risk area up here at 21.39. So we're not risking a whole lot here either. And once we get that penetration through the 21.22 area, we did have a nice little trip down to 20.25 or so. So once again, Very small risk area, very juicy reward area. Now, before I forget, we got one more of these to look at, but I want to backtrack here. Oh, it was the NMR. And I kind of blinked when I saw this earlier, but I think the risk on this NMR trade was like something ridiculous. I just got to go back and check. But the funny part is it stayed in. It's covering it up there, but I think the risk was 3 cents. I think the risk was, the stop loss there was 5.79, and it worked. So it just goes to show you that sometimes risk areas can be extremely tight. You usually don't see that small of a risk area in a Holly trade, but you did today. So just kind of wanted to point that out. Now, lastly here, we had another good opening range break in QURE. Come on, chart, you can do it. Okay, right here, about 45 minutes into the open as well. Let's got to squish that line down a little bit more to get past this low, but not a bad trade at all. Now, keeping in theme with the market and some of the other trades that we've looked at, good start. But if you didn't take the cookies, they didn't last long unless you were willing to sit it all the way back up to the entry level over here, which most people don't like to do. But a decent fill, 30.97. This thing was relatively liquid as well, finishing the day at 2.5 on the relative scale. So just a nice clean break here. Nice part about these things is if you wait for the choice setups, you really don't have to sit a whole lot of pain. So looking at this being the entry bar, prior 15 minutes up here, so we had a risk 31.50 entry. So this was the biggest risk that we had to take on any of these plays, about 50 cents. But from 30, let's call it 31, down to 29.56, still a much bigger area of reward than risk. The smallest of the three, but still a good trade nonetheless. So let's backtrack. How did TVBK finish on volume? And probably the weakest high volume stock of these three, but still kicking out a nice 1.69 on relative volume. So all three of these guys setting up with nice little A+ intraday setups, having good volume. And it's really just kind of odd because, you know, of the market action that we had today. But just kind of all bets are off right now as far as long, short, time frame of hold. You just got to exercise good risk management. And, you know, if you're uncertain, it's always a good idea. Maybe you just do half size and see how things go. Once you get a little bit of confidence in this type of market environment, you can always up the size. All right, so in case anybody wants to watch for range breaks with high volume, I'll go ahead and dump out the new T-low window in there as well. If I can make my fingers work here. There we go. And of course, we don't know what the market's going to do tomorrow. Maybe tomorrow it's the range breaks to the upside. So I'll go ahead and throw the other alert in there as well. And the beautiful thing about these configurations is we're just looking at new highs and new lows with accelerated volume. And then we're just making sure the image in the form of the chart pattern is what we're looking for based on what we just saw in these three examples. Now, I did want to take the time here to mention a couple of stocks because, well, we all know that stocks like to go up on the staircase and come down on the express elevator. And this is a classic example, these two stocks right here, okay? What nice runs Discovery A and B have had. But what took 3 months to happen, you know, if we come back to, just call it January right here, right about there, 3 months of just grinding beautiful upward momentum, all laid to waste in about 1, 2, 3, 4, 5 days here, okay? Of course, we bottomed out here, matching up with this little area back here that's apparently acting as support, but, you know, This one was being talked about today through some other traders here at the firm. And of course, I looked at it. I'm like, yeah, I'll take a stab at that because, I mean, we've got a clearly definable downside limit, or excuse me, you know, downside area here that we could use as a stop loss. So I had sized accordingly, and it ended up being a great scalp trade for the day because, you know, this guy got a nice little, probably 3 points between there and there. But just like everything else, if you didn't take the money, it eventually went away. But classic example, when the selling comes in, we go down quick. All right, 3 months, pretty much destroyed in 4 days there. Same thing with VIA. I think the plunge was even quicker on VIA here, a little bit more control. Well, not controlled, but 1, 2, 3, 4 days on the washout versus 5 on the disc A and disc B. But once again, this level of support way back here from the beginning of the year, what took 3 months to do, was wiped off in 1, 2, 3, and 4 days pretty much. The funny thing is, I believe this was the 22nd. Yeah, this was just last Monday when we were sitting here having the other office hours. And, you know, been watching these for a long time. Did I get short up there? No, I didn't, but I wish that I had. But via C and disc A and disc B, I'd certainly keep an eye on those. We might come down here and chomp around here and go lower, or we might, you know, we might grind higher and try to get a little bit of this back. So via C and disc A and B, I'd certainly keep those on my radar moving forward because there's going to be some action in them if you can pick the right spot. Good deal, George. Yep, that is, George is saying he made some good money on puts, and that is a great way to play the downside. If you don't want to short the common, you just take a stab on maybe, I don't know if, George, I don't know if the puts that you executed were already in the money or if you took a little bit more of a gamble and did some slightly out of the money puts so that you really get a lot more bang for your buck, but that's certainly a way to take advantage of some of these high flyers, giving yourself a little time as well, is to either buy some puts or sell some calls. A great way to give yourself a little bit more time horizon on those bets. Wow, good deal, George, good deal. Like to see those types of numbers. Okay, James, you were asking what scans I gave, the TVBK and the prior one. That was this one here, all right, the new T-low, which I have dropped into the chat window. So you should have 3 windows in there, the big up and down top list, the new T-low, and the new T-high. All right, ladies and gentlemen, we're about 45 minutes in. That's about all the content I have for it today. I hope you guys enjoyed it. Always appreciate you guys taking the time to come and hear what we have to say here. So Scott, if you're ready to let everybody know how they can save a little bit of money on an upgrade or a new sub, it is that time.
All right, thank you, Jamie. Thanks, everyone. Yeah, a couple items on the way out. There's a new ebook available. Just launched it. It has our director of software development, Dave Mabe's favorite strategy indicators. So go ahead and grab that. TradeIdeas.com/strategy. Plug in your email address, and you'll get the download. So do remember to check that out. Looking forward to hearing about if it's going to be as popular as the earnings ebook. We've also got a podcast. Search for Trade Ideas Podcast wherever you listen to your favorite pods. Add us as a subscription. It'll pick up the next download as soon as it's available. There's some good interviews in there that we've already released this year, so go ahead and check those out while you wait. Search for, use the code OPPORTUNITY to save 15% off your first month or year of Trade Ideas. Use it to do an upgrade from standard to premium or start a new subscription. You can find Jamie on Twitter at QuantBot. Steve is TI Steve G. And Trade Ideas Pro is the Facebook handle. Like us and share everything with your friends. And you can email info@tradeideas.com for support with any of your questions at all. So if you have anything you'd like to get a link to or an answer for, just go ahead and shoot us an email. The recording of the session will be on our YouTube channel later on tonight or tomorrow, and we'll send you an email from GoToWebinar with a link to the playlist where you're going to be able to find it. So thanks, Jamie and Steve and friends. Have a good one.
Thank you, Scott. Thank you, Steve. Thank you, everyone. We'll see you guys tomorrow. Bye-bye.